Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, go ahead and hit subscribe, turn the post notifications on so you'll be alerted every time I post a video. So, guys, what the hell is going on Wall Street? I know you guys seen today with your own eyes exactly how tricky the market was and is and how manipulated it is. And we know the market is manipulated overall, but the way you can tell whenever they let the market do its own thing, meaning move at its original stance, meaning everything in the market doesn't supposed to be moving in the same direction, because every business, every thing is not on the same type of time. Some businesses making money doing better than others, just reported great earnings and they moving up and they going up. And some businesses isn't doing as good and they doing bad, reported bad earnings, or the company's fundamentals not looking like they was before and they is trending down. So you know something is wrong and something is heavily manipulated, and they just hit a button to turn everything red whenever you got every sector, every area, good stocks, good solid companies that just reported solid earnings and showing a continuous growth, and knowing with all this that's still going on, certain companies that we still dependent on and need, regardless of the war, regardless of the gas prices, regardless of what's going on. It's a lot of companies in the stock market that we still is dependent upon. So these companies shouldn't all be coming down at the same time, nor should they be all going up at the same time. And that's exactly what I mean by knowing when the stock market is in a regular state, meaning it's doing what it's supposed to do. That's when you got different sectors going up, different sectors hot, some sectors not hot, and some sectors just staying the same, consolidating. But right now, what you've been seeing prior and on today, on certain days, we had got out of this point at a certain point in time, like about 2 weeks ago. Everything started going in different directions. When the oil stocks started going crazy, you had oil and gas stocks, and you had the tech stocks steady getting hurt, and then you had tech stocks going up. Oil and gas price stocks started going down. So we had seen that. We've seen the market go back into that state for a little second until, you know, they want to put their own dictations on the market. Because like I told you guys, whenever the feds, whenever the government, whenever they come out with some type of dictation, if they say something bad, the market going to always come down. If they say something good, the market's going to always go up. But if an individual company come out with some good news, that doesn't necessarily mean that stock is going to go up. It could possibly go down. And then if they come out with bad news, it don't necessarily mean it's going to go down. It could go up. But whenever the feds or the government, the big dogs, whenever they say something though, whether it's good or bad, it's going to go in the direction that they want to go in. Pay attention to that, guys. So like I told you guys, one of their biggest tactics is to get retail investors up out of here. Keep getting them. You got a lot of retail investors trying to time the market, thinking they smarter than these institutions and bankers, which, you know, you got to be well experienced and have calculated risk and very conservative when you try to go against these guys and try to, you know, piggyback off the market. Because that's why these, you know, we have these crazy spikes. The same stock will come right back down and shoot right back up and shoot right back down. I'm talking 30, 40, $50 a share, especially like a stock like Shopify. And, you know, if someone, you know, if you in on that stock, you've seen exactly how crazy it moved today. Ran up crazy in the pre-market, came down when the market opened, shot right back up to like 640 and came right back down. And that's what, you know, in the beginning of the day, the report, the data inflation report was positive. That's why we had a solid start of the day, guys. Like right here, Wall Street, them kids, we got somebody to give them today. My baby gonna help me out today. So just the background, don't worry about that. So Wall Street gains as growth stocks rebound after inflation data. See, we had a great start this morning. Things was picking up. Bull trap, trapping people in just to drop the market even lower. So the NASDAQ led Wall Street's main index higher on Tuesday after data showed consumer prices rose largely in line with estimates, taking pressure off high growth stocks that were hammered on expectations of aggressive U.S. interest rate hikes. So the surprise came in core inflation, and this provided some relief to the market that has been very concerned about inflationary pressures, said George Catronbone. I don't know if I pronounced his last name right, head of the trading at DWS Group. So you see, we had a strong start this morning. Then all of a sudden, come midday, towards the end of the day, we get a crazy sell-off. A sell-off greater than almost yesterday's sell-off. Stock market Stocks reversed earlier gains to close lower with the inflation data in focus. U.S. stocks paired gains and fell in the final hour of trading Tuesday to close a second straight session in the red as investors assess fresh inflation data out of Washington that showed prices in March further accelerated to a new 40-year high. The S&P 500 retreated to fall 0.3%, and the Dow Jones gave up an intraday climb to cap trading roughly 90 points lower. The Nasdaq Composite flattered after an earlier advance, declining 0.3%. So guys, we see exactly what's going on. Like I told you guys, this type of stuff will get retail investors riled up, make them put more money in when they seen that type of spike and that positive data report on pre-market. That'll make them rush in and put more money in. Now they got more leverage in. Now we're going to drop it even harder on them to make them really scared. They trying to scare you. I'm pretty sure after a day like today, even though people seen how quick the market can recover, they still got scared for the simple fact that it did that, then went cold red. Now it's leaving people in the dark like, oh man, what to expect next? So this is exactly what they plan is, guys. They acting like the world is the sky's about to fall. Like everything, like crises always come, guys. These type of times always come, and that's why cash is always a position. Having money on the side, waiting for crazy opportunities like this to load the boat, guys. The only ones that's scared is the ones that's over leveraged. They got all their eggs in one basket, all their funds tied in. So we know they got to play the blame game. So the population, which, you know, somebody is to blame for this. There's always somebody to blame. But like I tell you guys, it's never one thing in particular that make the stock market go up. It's never one thing in particular that make it go down. It's never one thing. It's all these things combined together. So right here on CNBC, they say 24% of the population said that Biden is the blame. 21% say corporations is the blame. 23% say the war is the blame. And another 24% say the pandemic is the blame. And I just got my own right here. I got YouTubers. 15% YouTubers is to blame. Even myself, if y'all want to say that, you know, because like I say, it's a responsibility. With power comes responsibility. And, you know, I know that. Like I say, this is not financial advice. Nothing no YouTubers say or anything. But deep down inside, people know people is using their words as power and using their words to invest in these companies and these things. And that's why I say that, you know, part of the blame too. But nobody ain't, you know, making y'all do anything with your money. You always got to be smart, be meticulous, use this as a wake up call. Like, yeah, dang, that is right. It do kind of, you know, but I always try to be very, very, you know, clear with you guys and let you guys know every single stock is not meant for you. Even if I feel good about it, I like it, it's not meant for you. I want you to invest in stocks that I talk about that you understand. Whenever I talk about the stock, as soon as you hear the stock, if you don't know off gate what that company is about, you shouldn't be investing in it. Meaning if I say Walmart, every one of you know what Walmart do, what they're about, their whole business plan. So, you know, that's a good, then you do your research, do your homework, make sure, see what institutions like, see what the forecast like on Walmart, see what on the big money doing, then see what they mouth saying, you know, do your little research and see what the fundamentals and look at the 20-year chart and see how Walmart has been doing over that long time period. And then you decide, guys. Don't try to go for every single stock you hear somebody talking about. Oh, let me look at this. Oh, let me look at that. Nah, you're going to be like a rat, a chicken with his head cut off, just running around looking for the next high, looking for the next whatever. When you need to just calm down, pump your horses, find your own stuff, and just use other people's stuff as, okay, he talking about, I'll take a look at it. I always know, like, I ain't really want to buy nothing nobody else talking about, but I will take a look at it. And if it checks my criteria, if it's my type of vibe, my type of stock, everything checks out, then I might put my hard-earned money in it. So, you know, just be smart, guys. You already know. So that's all I really got for this video. Just want to give y'all a quick update on the market, AMC as well. And one more thing I want to put you guys on game is, you seen how the market, overall market, was shooting off this morning. Everything was going green. Everything was going crazy. AMC was tumbling down. Meme stocks tumbling down, coming down, right? Because it's on the opposite frequency. But whenever the overall stock market is pulling down, they want to put AMC and meme stocks still on the same frequency. They want to have them tumbling down still. You know, we suppose you ain't want to give us the opposite whenever, you know, it's in our favor. Whenever the traditional market is pulling down, meme stocks supposed to be going crazy, because we're not on the same type of time they is. We don't, even though these is real companies, this not why people invested in it. This not why they ran the way they ran. They ran 4 times like this, being for the fact why everything else is getting jammed up. And they say the economy is, you know, not going to be spending money like that. That's the reasons, going into reason on why the market is pulling back, because inflation is at a all-time high. So it's like people ain't going to be spending money in these businesses. So that's what's causing the business to pull back ahead of time. And theoretically, people are still going to be spending, guys. So my thing is, we're not looking for people to spend money in AMC, GME. This is a movement, a game plan. So these things should be taken off at times like this, guys. That's just being real and looking at it from a real standpoint, guys. So you already know. That's all I got for this video. I love y'all. Add you boy on Instagram at the B Hayes Show. I love y'all. We out, and God bless you. We gone.